Hey, welcome back to another episode of the Health and Wealth Check-In with Dr. Tiffany Pringle of the TAP Insurance Group. Hey, Dr. Tiffany. Welcome back.
Hello. Thanks for having me back.
Yeah, you know you're part of the family now, so you're not going anywhere. So we've been getting great feedback about the show. Everybody loves all the information they're learning. We're educating folks, and I'm learning a lot from you. So I'm grateful for you to be here. Today we're going to talk about the topic of living benefit. What exactly is a living benefit? Can you explain what that is versus
Sure,
traditional life insurance?
definitely. So a lot of times people believe that life insurance is just that, it's going to cover you for your burial and leave some money behind. Well, there are policies out there that give you more than just a death benefit. They're called living benefits, which means it allows the policyholder to access a portion of those benefits while they are alive for certain health events that may take place in their life. So not only is it working for to have something if you were to pass, but let's say you were really ill, you can take a portion of the death benefit to utilize while you are living.
All right, that makes me think about, I have a girlfriend now whose mom is like 92 or something. And she was like, girl, my mom, she set herself up. She good. Like she's in an assisted living, but she's living off of her, whatever. I'm assuming it's living benefit and annuities and what have you. But
Right. So she's probably living off of her annuities, and she's probably living off of her long-term health plan, which is
okay.
another
Separate.
area.
Okay. That's a different show.
Yes. Different show.
Well, then in that case, tell us what situations would allow someone to access these living benefits early? Like what kind of illnesses and what kind of emergencies? Like, is there any specific things?
Yes, so medical conditions that would include terminal illness. So maybe the life expectancy is 12 to 24 months. A chronic illness could be the fact that they do not have the ability to use all of their activities of daily living, like bathing themselves, dressing themselves, eating. So if they lose any of those daily activities of living, they could also access those benefits because they would have a chronic illness. And
Okay.
then you have critical illness, anyone that has suffered with a heart attack, a stroke, or even cancer, organ failure, things like that. They can utilize a percentage of those death benefits to help them with their medical needs and just for having funds as they go through that process.
And is there like a certain amount of money? Like what's the average people usually have?
So each carrier is different. They may say you could take a percentage, they may say, up to 50%. So it just depends on the carrier. And I would say read the fine print to see what that carrier will allow. The nice thing is you don't have to pay that money back, but it does reduce the amount of the death benefit.
Gotcha. So when you do pass away, less money goes to your people.
But think about it, if you have $100,000 death benefit and you have an opportunity to utilize some of that money while you're living, let's say you only needed 30,000 of it. Well, you still have enough left, 70,000 leave for your family and for your burial. So it's still more than enough.
Yeah.
And if you're given a certain period of time to live, you could do the calculations. How much do I need to live off of or to help me through this in the next 12 to 24 months?
Right.
And will I still have enough to leave behind?
Gotcha. Now, what are some financial implications? Like if you take that money out, is it similar to like a 401k, like you get a fine or something, or
So
how does
there
that
may
work?
be, yeah, there could be some administration fees. Like they may charge you a percentage for taking the money out, or like I said, you just reducing the amount of the benefit that is left over. But you do
Okay.
not have to repay it back, which is, different from how IULs work. And I think we talked about IULs on another show.
Yeah.
Right. So like IULs, you could take money out and kind of borrow from your policy. And
Right.
it's like a 5% interest rate. whether you pay it back or not is up to you, but you have the option. Whereas these type of plans, once you take it out, there is no opportunity to pay back into it.
Okay. And I do have a question related to like, could you add this on to another plan, or can you have more than one life insurance?
Yes, so you can have more than one life insurance with different carriers. So if you had, the funds where it was affordable for you to carry that many policies, you could utilize the benefit from each policy. Most policies that have this rider benefit, they'll have the details on how you can utilize and what the time frame is. How long do you need to even have the policy in place to access those benefits?
Okay. And then what policies typically include these kind of benefits? Is that something that...
Yeah, so a lot of the whole life policies, I index universal life, which is the IULs, universal life, and then we're now seeing a lot of term policies offer these benefits. So there are some carriers out there that literally will say, hey, this is a term policy for 30 years or 20 years with a living benefit. So it's not a whole life, it can be converted to a whole life if you would like. But even while it is a term, you can utilize the benefit, the living benefits.
Okay. And then I guess my last question is, what is the most common misconception and what should people be careful of?
So the misconception is that all life insurance policies automatically have living benefits. That's not true. You want to read the fine print, and you want to make sure if these riders are available to add to your policy. Some are built in, some have to be added onto the policy.
Okay.
And you also want to look at, does that policy say critical illness and terminal illness, or just terminal illness? So that's a difference.
Oh, okay.
Yes. So some policies will have them both in there, but others may have one or the other.
What's the difference again between terminal
So
and
terminal illness means you don't have long to live.
Okay.
You have 12 to 24 months to live. Critical illness means you either had a stroke, heart attack, you have cancer, there's something major going on.
But you can still live longer. Yeah.
Exactly. Right.
Okay.
So to be able to have both is definitely, I would say, a win-win, because you can pull money out as you need it for those circumstances.
Gotcha. All right. Well, that was very informative. I think we got the gist of a living benefit. And if anybody's interested in purchasing an insurance package with Dr. Tiffany Pringle, you can just go to the link in my bio or the link below, and we will lead you in the right direction. All right. Well, any last words?
Thank you so much for having me so that we can share this information with others. Last thing I would say is that not all life insurance plans are equal. They all have a little benefit here or something that may fit for another person with another type of plan. So always read the fine print and try to plan ahead. And I will say this, get your policies while you're young.
That part.
So that you can afford it, right? Yeah. Because if you're in your early 30s, even your 40s, you want to get a policy now so you don't have to pay that much for it. Because as you and I have spoken before, we've been hearing stories of people who are having heart attacks in their 30s now. So just imagine if you had a policy.
Colon cancer is on the rise, especially for Black men. So yeah.
Yes. So these are very important things to consider. We don't know what can happen tomorrow, but at least put something in place for the future, because you'd rather have something than nothing. Right.
All right. Well, thank you so much, Dr. Pringle. Well, everyone,
thanks for having me.
You're welcome. Everyone, stay tuned for another episode of Own Your Power TV. All right. Bye.